Welcome back, everyone. This is JP Trades, and I'm going to teach you something extremely important today about the markets. And it's going to build on what I was teaching in the previous lesson, which was drawing out your market structure. But this is one of the key lessons that allowed me to take myself from a break even trader to a full time professional day trader and one of the best scalpers on this side of the moon. So let's dive a little bit deeper into what we were explaining in the first lesson, and let's move on to what is called market structure expectational order flow. And what this is going to pertain to is looking at multiple time frames. And that's extremely important to not forget your higher time frames if you're a scalper and you live on the 5 minute, the 3 minute, the 1 minute, or even if you're scalping with order flow. You always need to take into account what the higher time frames are doing. But even swing traders out there that are always focused on the higher time frames, this has a whole other set of reasons that have heavy importance to swing traders. Now, as you can see on the screen, I have a few reasons why this is so important and what this is going to demonstrate. Let's go over those really quickly. It's going to show you how market structure is fractal through all time frames. It's going to allow you to refine high time frame trades into refined entry models with minimal risk. Also going to teach you how to turn those scalps into swing trades. And one of the best things for beginner traders, it's going to teach you how to not get FOMO. If you miss a trade, market structure can always show you another way to get in if you truly understand the depths of what I'm about to teach you. This is also going to demonstrate how the first tap into a high time frame key level usually isn't the best refined entry. It's going to show you how to successfully trade while having a 9 to 5 job by using an alert system and finding multiple opportunities to get into a trade with proper risk management. It's also going to show you how to have several entries on a swing trade or to add to your trade using refined areas for exponential compounding effect. It's also going to teach you how to have multiple time frames all aligned together to give you multiple market structure confirmations for your swing trades or even day trades. It's also going to show you how you can trade counter trend setups along the way to your ultimate swing setup. And most importantly, this is going to show you why market structure is king. And you can trade any asset, any time frame using only market structure. Now, in this video, this is going to be a bit of a watered down demonstration of what's going to be in my upcoming course and what I teach my students in one-on-one mentorship. The reason being is because it's usually going to take me about an hour or two to fully go over explanations and fully get people to understand the depths of this. But I will show you a surface-based explanation and walk you through some visuals that will at least give you the ideas so then you can start learning deeper and deeper and deeper. So let's dive in. Let's first go to, we are on the daily time frame currently. This is what our daily structure looks like. We're going to put our legend on the screen so we can see that each time frame is going to have its own color of market structure. So on the daily time frame, we can see, and again, you can take this from the previous video I just put out on how to draw market structure. You should already know how to do that, so we're not going to go over that in this video. So basically, you have your daily market structure path drawn out and charted, and you have an order block or any type of point of interest that you might like to use to trade from, basically a key level or a key point of interest. So we have that here. And of course, you can take the trade from it. And if you did take the trade and you have that expectational order flow from making a higher low to a new higher high, your trade would be a 15-hour trade if you would enter in on the top of this order block and have a stop loss at the low of this order block. So you'd be taking your trade from here all the way up to make a new higher high. Now, let's break that down and let's go to our 4 hour. In this leg of market structure on the daily, we can see that the 4 hour had to break down bearishly to get to this point of interest. So now that you see that market structure inside of the higher time frame structure, you're now starting to see the fractal nature of market structure, or you're seeing that when you pull back the daily onion layer to reveal the 4 hour onion layer. So let's go down to the 4 hour. Now we see the 4 hour candles, and let's hide our daily market structure. Let's just focus on the 4 hour. So we draw our path, we see our expectational order flow, we create a point of interest, no different than we were doing before. And if you were to take that trade and hold it to your swing target, that trade would net you a 24-hour trade. Again, putting your trade at the top of the block and the stop loss at the below of that order block. Now, let's keep on moving to the 1 hour time frame. Now we can see our breakdown of the 1 hour time frame inside of our 4 hour candles. So again, we're peeling back another onion layer to reveal a smaller piece of the onion inside. So let's get rid of the 4 hour and let's go down to the 1 hour candlesticks. Now we have our 1 hour path, and we do the exact same situation here, picking out a point of interest. And now we can see if we were to take that trade and hold it to the ultimate swing high of the daily time frame up here, this would net you a 60-hour trade. That is massive. Now let's go to the 15-minute. Now we can see our 15-minute structure inside of this last leg of 1 hour structure. Again, we're just peeling back another layer of the onion to reveal a smaller portion of the onion. And let's go to that 15-minute time frame so we can see the actual 15-minute candles. Let's hide the 1 hour. So the 15-minute, we actually had the same situation here, and it gave us a much bigger order block to trade from, which is okay. But let's say, for example, you didn't like this order block because you had to have a bigger stop loss, or this happened at 2 or 3 a.m. in the morning. Let's say as a swing trader, you missed this one. Okay, that's fine too. Let's go down to the 5 minutes. And inside this last leg of 15-minute structure, you can see that we have 5-minute structure. Why? Because market structure is fractal. Peeling back another layer of the onion, and let's go down to the 5-minute time frame to follow that 5-minute candle, that market structure path. Hide the 15-minute. Now we're inside. Just looking at the 5-minute time frame and the 5-minute market structure, we see the same thing going on. Why? Because market structure is fractal. And if you take that trade, beginning of the block, stop loss at the low of the block, and you take it all the way up to that daily swing target, that is a 114-hour trade. That is absolutely insane. So you can see now why it's really important to understand multiple time frames, multiple legs of market structure. Now let's put this in a little bit of perspective, and let's do a recap. Let's get rid of that. And we can see here, if we had an account size that was $10,000 and you have a risk management size where if any one of your stop losses is hit, you're only risking 1% of that $10,000, meaning every single trade, you only risk $100 if your stop loss is hit. Now, your swing trade plan is to enter in as many low risk positions as possible at a daily or 4-hour accumulation. And that's what I just showed you. Now, each trade, you had your daily time frame point of interest, your 4 hours, so on and so on. So if you would have taken all 5 of those trades on all 5 time frames, and broke it down just like I showed you, this would be your results. And for a total recap, on a daily or 4 hour time frame swing trade, you had the potential for 5 different entries. You had the potential risk if you took each entry, $100 each trade, which would be a total of $500 risk. But you had the total potential reward of a $23,100 gain, which gives you the average of a 46.2 R, as well as a 231% gain on account, where you're taking your account from a start of $10,000 to $33,000 100. So it's basically 3xing your account. So now, what are the downsides of this? Well, the downsides of taking such a large swing trade is that you're going to have to come all the way up here and expect that as your expectation order flow. And we all know, especially the times that we live in, that someone can come out or news can come out and say something, and you get all the way up here, and then it comes and takes you out. So you have to use proper risk management. And I teach all about that, how to trail stop losses, how to take profits in different areas, and what to look out for when things go wrong. So what do? I do this exact same thing, but on a day trade and a scalp perspective. So I'm doing this on multiple smaller time frames, but I'm also using a professional order flow software, which takes a lot of time to learn how to use it, and it takes even more time to practice it. But with the courses and the content I have coming out, I have figured out a way to make everything simplified and to fast track you from anywhere that you are at to learn this entire system and to become profitable consistently. So if you like this video, comment and like. And if you would like, come join us in our VIP Discord at Nordic Alpha Trading Discord. And we will soon have different levels of courses to offer. And we're going to be teaching all of this in much, much greater detail and much greater nuance. So you are able to not only just apply these concepts, but I'm going to give you 10 plus years of experience to understand how some of these really high probability concepts can go wrong, because the market is not always 100%. So you also have to know how to protect yourself. And that is where I excel at more than anything. I have learned how to protect my trades, and you can come and join us in our Discord and you can see me trade there every single day and what I'm talking about in live real time. So I hope to see you over there. And if you would like one-on-one mentorship, come over to the Discord and shoot me a DM or reply down here in the comment section and tag me at JP Trades.